The Eichmann case is really all about whether or not land that is somewhat used in a business can qualify for the concessions or not, the small business CGT concession. The sale of a property could be completely tax-free, or there could be tax of up to about 25% on the disposal of the property. So there's serious dollars at stake. In order for a property to qualify for the concessions, it needs to be an active asset, so used in a business. This case is really the first case to really go through in quite a bit of detail when property will be considered to be used in a business, as particularly relevant in cases where it's what I call sort of quasi-use, in that there's a bit of a question mark on whether the property is really used in a business. Mr. Eichmann and his spouse purchased a property in Mooloolaba in 1997. That was their matrimonial home, so their main residence. 2 years later, they purchased the neighbouring block of land, and that was a vacant piece of land. Taxpayer's family trust carried on a business relating to bricklaying and in building industry. And this property that was vacant land, there was use of that property in relation to the business. There was 2 4 by 3 metre sheds on the property, and that those sheds were used to store relevant material, and that the rest of the land, which was more than 90% of the land, although it was vacant, other material was stored on the land, and vehicles every day came in and out of the land to pick up supplies, sometimes multiple times per day. Now, of course, the land was in a residential area, so there wasn't business signage or some of those hallmarks of more industrial or retail land. Essentially, if you were to drive down the street, what you would see is a residential neighbourhood with a block of vacant land that may or may not have some building supplies on it. In 2016, the taxpayers sold that land that they held, the piece of vacant land. They kept their main residence, but they sold that vacant piece of land. And what the taxpayers did is they actually approached the ATO to seek what's called a private binding ruling. And seeking a private binding ruling is really a way of going forward to the ATO to ask, do I meet this test, or whatever test that is? So the taxpayers went forward and asked, is this property an active asset which the concessions can apply to?